Hello everyone, welcome to the Ichimoku daily analysis for the SP 500 for Wednesday, June the 30th, 2010. Well, a continuation of the trend to the downside, and we have a candle with a lower high and a lower low. This market was testing the support around the 1041 level, which we can see here previously acted as support and the market rallied from. The market has failed to rally from this area, so fairly bearish consequences for this market in this price action of today, taking out this support with a fairly bearish candle. Now, we highlighted the fact that there was some good solid support down around the 1029 level, and that's exactly where the market has traded to, and it's bounced off that level slightly. So that level becomes very important over the next few trading days. Down below there we have support at 1018, and that was a fairly strong level from quite a fair while ago. Now, just looking at the size of the body of the candle, the size of the body of the candle has reduced substantially. It's much less than half of the size of the previous candle. And that tells us that the sellers have made, even though they've made net bearish progress, they've made a significant amount less than the previous day. Now, you would expect that when you have an extremely bearish day. So it's not unusual to see a day that isn't quite as bearish as the previous day when the previous day was at such an extreme. The fact that this market has closed down near the low tells us that the sellers have closed this market in control, and they're still showing commitment to taking this market lower. Now, if the market does rally, the 1041 level now, which was previously resistance, and certainly this level at the previous high become important around 1041 to 1047 for a potential high and higher lows, but there aren't any signs of that happening yet. This market has been fairly bearish today as well. Obviously, to the downside, 1029 is important. Now, the market is trading down below the Ichimoku cloud, which means that it has an overall bearish bias, and also trading down below the Tenkan-sen and Kijun-sen, which means it's bearish in the medium-term and fast-term timeframes, so bearish in all three timeframes. Just looking at both of these indicators, the green line is the Tenkan-sen, the fast-term, and the Kijun-sen is the medium-term. That's the pink line. Both of those are pointing down fairly sharply, and that reflects the strong downside momentum that the market's built up over the last week or so. So a fair bit of strong downside momentum. If the market does rally, that's an obvious place where the market may find resistance around 1079, and that coincides with the previous support and resistance area. So the market will still need to do a fair bit of work to trade up to that area, and there's no. It's more likely that the market will trade down, even though it's trading at this important support level. Now, we haven't had a crossover of the Tenkan-sen below the Kijun-sen yet, and when that does happen, that is a bearish signal, and a very bearish signal if it happens below the cloud, which is the position that they're in at the moment. Those two lines are equal at the moment, so we do need to watch for that bearish crossover if that does happen. So over the next trading day, the 1029 becomes very, very important. If that's taken out, then the market will trade to 1018, and obviously to the upside, the 1041 to 1047 level is important.